What is going on, traders? Welcome back to the Traveling Trader. Tomorrow, there is an FOMC meeting. This is the meeting where Papa J. Powell will be talking about inflation and potential tapering. This could cause the markets to go one way or the other, or as we saw with inflation data last week, which was mostly priced in, could cause the markets to do absolutely nothing. So in this video, we will be talking about the potential repercussions from the FOMC meeting, what we expect, how they can affect the markets. More importantly, I'll be giving you the top 5 stocks to buy right now. The top 5 stocks that are on my watch list. These are stocks that I feel like are undervalued and could grow significantly within the mid to long term. So you'll definitely want to stick around till the end of the video to capture our trades. Obviously, I'm going to be giving you a market update as well as go over some of the current plays that we had from previous videos and previous trade alerts. Let us get right into it. If you get anything out of this, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you are trading. Without further ado, let's get right into it. So as I said, last week the inflation data came out, but the market really absorbed that rather well. As you see, there is little change to the treasury yields. Now, we did open up puts on TLT, which is a treasury bond ETF, because we thought that the yields would go up, which would send TLT going down because there is an inverse relationship. But in hindsight, we actually didn't even need that hedge because, as I said, the rates remained unchanged. Now, based on a bunch of reputable insiders and analysts, it looks like that the Fed is really not going to be talking about raising rates at all tomorrow. Actually, it would be to their disadvantage to do so. It will most likely be the last tool in the shed that the Fed will use in order to try to curb inflation, because raising rates would be the most destructive thing in the short term to the markets. If you look at this survey by an analyst firm named Econ, there is a 95.7% chance that the Fed will keep rates steady. So if we think that rates are going to remain steady, what is the other thing that the Fed is going to be talking about? Well, it's tapering. What does tapering mean? Long story short, tapering means to trim the asset purchases that the Fed is doing. Obviously, the Fed is pumping a lot of money to uphold the markets, right? Whether you agree with it or not, it's basically an artificial propping up of the markets so that they don't collapse upon themselves, especially if we're in a near recession like we were at the height of COVID. So in this case, the Fed is going to talk about tapering. Now, how much they taper, I think, is going to determine how the market reacts. But they are remaining with the narrative that the rise in inflation is transient, meaning temporary, and just a matter of consequence based on these very unique circumstances that will likely pass. So with that said, you can see that the S&P 500, along with the other major indices, are knocking on heaven's door right now. What do I mean by that? They're trying to break through resistance. This is all-time high territory. Unless Papa J. Powell says something extreme in nature, I do think that the indexes will likely trade sideways for a while. As I said, June tends to be a choppy month, not necessarily a net negative month, just a choppy month. July is usually an exuberant month, especially surrounding the July 4th holiday. Americans apparently love pumping up the stock market around American holidays. All right, so that's my quick take on the markets. Let's briefly get into some of the plays that we currently hold, and then we'll get into the top 5 stocks to buy. From the previous videos, we had Pinterest, which is up, Twitter, which is up. Toyota Motor, when I made that video, was at 152. It's currently trading around 181. Ford was around 11 bucks, cracked the $16 mark. Peloton was a steal on the overreaction at 82. Currently trading at around 108. Bumble, we had it at 40. Now it's 50. And then how could I forget about AMC? We had AMC at around $9 and change, currently cracking the $60 mark, as you see here. The last 2 AMC videos that I did, go back and watch them. But I called out this bull flag here, said that we will likely break out of it and that the target would be the 3.272 fib level at $63. We hit almost exactly that point today. All right, so what are the top 5 stocks to buy now? Well, the first one that I'm going to put on your list is TTD. I've talked about this before. Huge fan of the trade desk. Obviously, this earnings overreaction here was a very lucrative buy point. We got it at under $500. But for those of you that have not picked it up, TTD traded at almost $1,000 just a few months ago, okay? And they are announcing, or they announced a stock split. They are actually going through with the stock split on June 17th. So just in a couple of days from the time of this recording. Now, what do we expect from the stock split? Well, in my view, I think you should wait. I think you should wait for a day or two after the stock split. Why? Let's take a look at Apple. How did Apple react to the stock split last year? Well, we had a nice run up to the stock split, but we tanked 25% a couple of days after the stock split. Even Tesla, which was a powerhouse last year, right? It looked like it it couldn't be stopped. When they announced the split, we had a nice run up to the split and then a 35% tanking that started a day after the split. So TTD had a nice run up from the 480 range, 470, 480 range, hit 600, and we are now getting the split. So I don't expect, because we already tanked so much before the split, I don't expect us to tank much harder. However, we could see a slowdown in price, potentially a retracement back to the $500 level, at which point there will be a lucrative buy point. But obviously at that point, it's not going to be $500 because they're doing a 10-for-1 split. So it will likely be around the $50 range. But in my view, you can wait for a day or two after the split and then get in at the retracement. All right, stock number 2 is pretty easy. This is an easy buy. We bought this again below the $500 mark. This is Netflix. Netflix is trading in this long range going all the way back to July. Is it a reopening play? Is it a stay-at-home play? Is it a little bit of both? Are their subscriber numbers growing? Is the revenue growing? How much is Disney Plus a competitor? That's why you see it bouncing around in this channel, because this is basically everyone's psychology mapped onto a chart, right? This is the question and answer game that the bulls and bears play with each other. But being at the bottom of this support channel, I'm happy buying Netflix below $500. All right, now we are delving into riskier territory. The next stock that I'm going to be talking about is Ocugen. Ocugen is a pharma stock that has a COVID vaccine in the works. This could be the next COVID vaccine that actually gets approved. That vaccine is called Covaxin, which is actually in use in some countries, but it is waiting approval in the EU as well as in the US. Now, it did tank the other day, tanked almost 30%, which is music to my ears because that COVID vaccine is still in the works, right? There's still trials being done for that COVID vaccine. However, the reason it tanked is because the FDA determined, or whoever the board is, determined that Ocugen needs to run another trial, which was unexpected. So they didn't dismiss it completely. They just said, hey, go back and run another trial. Because of that, the stock tanked 30%, and I'm happy to buy it here at just below the $7 range. And a news story came out just this morning saying that Ocugen secured manufacturing partnership for Covaxin in the US, meaning they're preparing for it. The quote here from the Senior Vice President, Manufacturing and Supply Chain said, securing US-based manufacturing capability is a critical step as we prepare to submit our regulatory submissions to the FDA and Health Canada. Ocugen had confirmed its plan to submit its emergency use authorization application for Covaxin to the FDA in June. So there is a major catalyst here for Ocugen, a cheap stock that can actually rise past the $10 mark. It even hit almost $16 just a few weeks ago on hopes that the vaccine will get approved. Obviously, as I said, that has been derailed, but derailed temporarily. So I'm happy to buy Covaxin below $7. However, I still would set a stop limit. I wouldn't hold this past maybe the $200 moving average, right, which currently sits at around $4.60. If we break that support level, I will likely abandon this trade. So make sure that if you are going to enter this, one, know it's risky. Two, know how to set stop limits. This is not a bag holding exercise, okay? All right, stock number 4, another overreaction play. We actually sold a cash secured put on this just moments ago. I sent that trade alert out in the private Discord group. If you want access to that, link is in the description below. Would love to have you. You get access to all of our trades, the entire community, thousands of members talking trades all day, every day, stocks, options, futures, etc., crypto. You definitely want to be a part of it, and we'd love to have you. So DraftKings, we sold a cash secured put on. So there was a Hindenburg short report, and I love when these come out because usually if you attack those stocks that Hindenburg tries to attack, right, there is an initial wave of fear from the market and a sell-off. But those stocks tend to almost always rally. Those Hindenburg short reports only work for a very short term. As a matter of fact, right when that happened, Credit Suisse came to DraftKings' defense and basically called bullshit on Hindenburg's short report. And just from that, DraftKings gained 8% today alone after dropping by almost 11%. So, and you could see the volume coming in here on DraftKings. There was a lot of selling and then a lot of buying. And this is the tallest volume bar that we've seen since October 2020. As I said, we sold cash secured puts on DraftKings. We are currently up on those. You could also buy a leap call, which is a long dated call option on DraftKings. But these overreactions here are music to my ears. Does that mean that DraftKings cannot continue to fall? No. But I'm I'm happy buying DraftKings at almost a 40% discount from all-time highs, especially on an overreaction from a shitty company like Hindenburg. All right, the last stock on the list, also an overreaction. As I said, guys, I'm bringing you the value here. I'm looking for value here. Obviously, we did a lot of reopening plays. I've done hundreds of videos on reopening. You know, we talked about the cruise lines, the airlines made a killing on those, oil, right? I talked about Marathon and Occidental, Diamondback Energy. Those stocks are now at the highs that we saw before COVID. As I said, those stocks would reach, especially the oil stocks would reach the highs that we saw before COVID. And they are there now, right? So I've done tons of videos on those. These are just undervalued plays that I'm spotting in the market right now per the current market conditions, okay? So the last stock I'm going to be talking about is Okta. Okta hit long-time support. This support has been in play really since, if you go all the way back to July 2020. And if you don't know what Okta is basically a cloud SaaS platform. It provides identity management and security for enterprises as well as government and public organizations. They are growing at a massive clip here. We are experiencing 40% revenue growth year on year, 42% forward growth. Their trailing 12-month gross profit margin is also increasing at a very impressive rate. So I do like buying it here as support, but watch out. As you can see, this stock can be very volatile. You could set up a swing trade to take profits at around the 250 range, the 250 to 280 range, right? But in the long term, I think once this company learns how to become profitable, then Okta could see an exponential increase into that $300-$400 range in the long term. Now, one more stock that I'll talk about, not necessarily a pick at these prices, is NVIDIA. If you're a fan of this channel, you know that we've been buying NVIDIA for a very long time. NVIDIA successfully crossed the $700 threshold, but they do have a split coming up next month. And I expect that this run-up is a lot closer to what we saw with Apple and Tesla, where there was a pre-split rally breaking resistance, and then we will likely see a retracement after the split because it will be viewed as a binary event, and the smart money will dump the shares onto the FOMO buyers. So looking very much to either sell calls, maybe play a put spread, maybe buy puts as we get nearer to the stock split date, but keep this one on your calendar, NVIDIA. Keep the stock split on your calendar. It looks like it's happening July 20th. And monitor what happens with NVIDIA after the stock split. Maybe a great opportunity to pick up shares if we see a 20 to 30% drop on NVIDIA, the same way that we saw with Apple. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you are trading. Sign up to our wonderful trading community and the private trade alerts below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.